Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. As the name goes, Reliance Housing Finance Limited is a housing finance company which has been part of the Anil Ambani group of companies. Its business activities are those of affordable housing, providing high value housing loans, providing construction finance, providing loan against property, and also providing property related services. The company started raising money from the public about 8 years ago by way of debentures, etc. And 2 years ago, sometime in August 2017, it made a public issue of shares of about 1600 crores. Things looked to be good for the company till they came out in the open. It was sometime in the middle of last year that the statutory auditors of this company, Pricewaterhouse, suddenly resigned. They said that they had not got adequate information and explanations in respect of their material observations and transactions, which, if not explained, had a material bearing on the financial statements of the company. In other words, all was not good. The management felt betrayed and threatened to file a huge defamation suit against the statutory auditors. Thereafter, a default started. The company defaulted in the repayment of its loans and other obligations, and its credit rating was downgraded to default status. At that point of time, the National Housing Bank also gave directions to the company to look into certain regulatory anomalies, questionable related party transactions entered into by the company. The NHB said that there was wrong concentration of credit and it did not take very well that there were delays in repayment of debentures, and it asked the company to increase its housing loan exposure and reduce the concentration of loans by way of corporate loans. Things started going downhill, and in August 2019, Grant Thornton were appointed as forensic auditors to conduct a detailed forensic audit of the company, particularly in respect of frauds, if any, siphoning, embezzlement, or diversion of funds, if any. The forensic auditors were also asked to look into any malified operations, falsification of accounts by the management, any fraudulent conduct of transactions, and the report was required to be given in a time-bound manner. About 20 banks, led by Bank of Baroda, at the moment have an exposure of over 10,000 crores on this company. The report of the forensic auditor came recently out, and according to us, its findings are incriminating. It shows a large-scale blatant misuse of funds according to us, and it certainly shows that its affairs are not being conducted in a manner which is expected of such a company which is dealing with large-scale public money. And what were those disturbing, incriminating findings? The first one, Grant Thornton says that about 12,000 crores of loans have been given by the company to what are called potentially linked entities. These are entities which had a common address, common directors, common key management persons. Some of them were very recently formed. Their financials were very weak. In some cases, while the company had a paid up capital of just 10,000 rupees to maximum 12 lakh rupees, loans of over 100 crores were given, and Grant Thornton says that these monies finally came back into the system of the promoter group. Out of these loans, 8,000 crores of loans are still outstanding, and about 2,700 crores of loans are said to have been written off. The second issue was that 1,300 crores of loans have been given directly to related parties of the group, which is a violation of the law. Then, loans were given to 47 companies, again with common addresses, common directors, indicating clearly that they are shell companies, and the money given to them finally came back to the promoter group. There was a clear case that credit appraisals are not up to the mark, and prudential norms of lending and conduct of management of a company of this sort have certainly been violated. In response to this report of the forensic auditor, the company wrote to the stock exchanges saying that the report of the forensic auditor has been received and that there are no adverse findings in it. The company said in its letter to the stock exchange that there are no findings of fraud, there are no findings of siphoning of money, embezzlement or diversion of funds, malified operations, falsification of accounts, and neither are there any adverse comments, it says, in the matter of quantum of funds given and the end use of the funds that were given. This is the contention of the company. In our opinion, this contention is not correct. This is a very clear case of large-scale misuse of public money. Very clearly, money has been given to shell entities and has been brought back into the system of the promoters. And this is one of the commonest means of diversion of funds according to us. It has been found in the case of ILFS, PMC Bank, DHFL, and a similar allegation in the case of India Bulls that large-scale loans running into thousands of crores have been given by these NBFCs to shell entities, and they finally circulated back into the company system. By doing that, not only loans were given in violation of the established norms and regulations, but very clearly it was window dressed too. And according to us, this amounts to a very clear diversion of funds. The findings of the forensic audit report, according to us, have dismayed the lenders, and they are a worried lot. The IDBI Trusteeship Company Limited, which represents the interests of 20,000 retail bondholders who have collectively given over 3,500 crores to the company, they are contemplating suitable action. What is being demanded is an immediate recovery action against the company to ensure that there is no further misuse of funds by the company, as we have seen. They say that suitable criminal action must be taken to prevent any further malpractices and to punish for the malpractices of the past. Yet another report says that certain bondholders have approached the NFRA, the National Financial Reporting Authority, which is the audit regulator, seeking suitable action against Pricewaterhouse for its inability or failure to have detected these kind of anomalies and irregularities, because of which there has been such large-scale misuse of funds. To us, this is just another case of an NBFC whose management has misused public money. The management of Reliance Housing Finance may say that the forensic audit report does not have any adverse findings. We would differ, and we would say that the forensic audit report certainly indicates large-scale misuse of funds by the management of the company, and that itself is enough to take serious criminal action to punish all those who are wrong. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, well, subscribe to our YouTube channel.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, well, subscribe to our YouTube channel.